Hey guys, welcome to today's video. I hope you guys are having a safe and enjoyable 4th of July holiday. I know I am. But anyway, let's get down to what we are here for. Now today I want to talk about one of my clients' success stories. I want to talk about how I have helped my client save $8,525 using only 3 strategies that I have taught him. Now, in case you don't know who I am, my name is Nikki Burns, and I help 6-figure multifamily buy and hold investors save on average $50,000 in taxes and maximize their cash flow so they can add more doors to their rental portfolio. Now, before I get into all of the nitty-gritty about those 3 tax strategies, be sure to hit that like button and subscribe to my channel so we can help push this content out to others that are looking for this help. Now, you ready for those 3 tax strategies? All right, let's get started. Now, the first strategy that I want to talk about is the mileage deduction. Now, this is a tax deduction that the IRS gives business owners for using their vehicle, whether it's business or a personal vehicle for business use. Now, there are 2 methods to calculating this tax deduction. The first one is the regular method, and that is the actual mileage that you're using for your business. 2 is the actual expenses method. That's the money that you're spending for fuel. Now, this is one of the great deductions to capitalize on because it helps you to cover the cost of what you're already spending on your vehicle anyway. And also it helps you lower your tax liability. Now, in order for you to qualify for this deduction, you must not be operating 5 or more vehicles at the same time in a, like a fleet service. 2, you must not have taken the Section 179 tax deduction. 3, you cannot take this deduction if you are not using the straight line depreciation method. 4, you may not have claimed any special depreciation allowances on this vehicle. And 5, you must not have claimed actual expenses on a vehicle that you have leased after 1997. Now, I want to show you how to calculate this tax deduction. Okay, let's say that we're using the actual method. So this is just a straightforward method. So it's just the actual costs, the actual expenses that you've incurred for the vehicle. So that will be the fuel. So let's say you spent $5,200 on fuel for the entire year. So that will be your tax deduction using the actual expenses method. Now, using the mileage method, let's say that you have used 15,000 miles for business purposes. Now, the IRS gives you a 62.5 mileage rate for each mile that you use for your business vehicle. So let's say that you have used 15,000 miles. So you multiply the 15,000 miles by 0.625. So that's 62.5 cents. And that would give you a mileage deduction rate, of $9,375. Now, depending on certain situations, now there may come times where the standard may not be the best fit and the actual may be the best fit. So let's say that you're putting on less mileage. So the less miles that you use, then the less likely the standard will be in your favor. But the more miles that you're putting on your vehicle, then the more likely the standard mileage rate will be in your favor. So you have to play around with each of the numbers to make sure that you see which one is giving you the most tax savings. And one caveat about this is that if you want to use the standard mileage, you need to use it in the first year that you are placing your vehicle in service for use. Then come afterwards, then you can choose to use the actual or the standard or vice versa. Now, moving on to the second tax strategy that my client took advantage of, and that is the home office deduction. Now, the home office deduction is a tax write-off that the IRS will allow business owners to use for using a portion of their home for business use. Now, also with this method, there are also 2 methods to calculating the home office deduction. So you have one is the regular method, which is the percentage use of your home. And then 2 is the simplified method. And that is just the IRS giving you $5 per square foot that you use. Now, this is another great tax deduction because it helps you to capitalize on working remotely, being able to work from home instead of working out in an office. And also it helps reduces your overhead costs when you're working from home. Now, to qualify for this deduction, you cannot and I say you cannot be an employee, and 2, you cannot be a partner of a business. Now I want to show you how to calculate this tax deduction. All right, so let's use the regular method, which is the percentage use. Now, using the percentage use, you have to determine what all of your monthly expenses are. So such as the real estate taxes, your insurance, your rent, and your real estate, your mortgage interest. So you have to calculate all of those expenses that you would incur for your home and add all that up. And then you have to determine how much of all of that can you write off. Now, to calculate what percentage of your home you're using, you would take the current square footage of your home that you're using, and you would divide that by the total square footage of your home. So let's say that you are currently using 250 square feet of your home, and your total home square footage is 2,500. So you would take 250 and divide that by 2,500. So that is going to equal 10%. All right, so they're saying that you're using 10% of your home for business use. Now, we're still not done here. So let's say that your total annual expenses for your household is $20,000. So $20,000. So we take the total expenses and multiply that by the 10%. And that would give us a deduction of $2,000. So with the regular method, we're able to get a $2,000 deduction. Now, using the simplified method, we have to take the actual square footage and multiply that by $5 because the IRS is going to give us $5 per square footage that we use. Now, the other caveat about the simplified method is the IRS will only allow you to deduct up to $330 square feet. So you can only get a maximum of 330 square feet. So using the same scenario that you're using 250 square feet, multiply that by $5. Okay, and for the simplified method, that gives you a deduction of $1,250. So the IRS will allow you to deduct $1,250 using the simplified method. Now, as you can see again, the regular method is giving us the bigger tax deduction. So it's kind of similar to the mileage deduction. So if your expenses are going to be a lot higher, then it may be better to use the regular method for the home office deduction as opposed to the simplified method. Now we're moving on to the last strategy, and that is depreciation. Now, depreciation is the allocation of an asset's cost over its useful life. Now, when I say useful life, I mean how long is that particular asset expected to last before it breaks down or before you have to get rid of it. Now, the depreciable items that could be depreciated over its useful life would be things like your equipment, real estate, vehicles, and etc. Now, you may be wondering, why is depreciation such a good tax deduction? Well, one, it's a non-cash expense, meaning this is money that you're not coming out of pocket on in order to claim this deduction. So this is a benefit because it's going to help you maintain more cash flow, but get a bigger tax write-off. And it's also going to help you lower your taxes. Now, in order for you to claim depreciation expenses, you have to purchase an asset. Now I'm going to show you how to calculate depreciation. Now, my client used his business vehicle. And I'm also going to show you how to calculate depreciation for a rental property as well. All right. So now these numbers that I'm going to bring up, these are not the real numbers that my client had used when he purchased his vehicle. I'm just going to make up some random numbers for easy math. All right. So let's say that you purchase a business vehicle for $25,000. And a business vehicle, their useful life is on average is about 5 to 7 years. Some could be longer, but on average is about 5 to 7 years. So let's just take the 5 years to be more conservative. So we will take the total cost of the asset and divide that by the useful life to get our annual depreciation. So we paid $25,000 for a vehicle, divide that by 5 years, that means we can write off $5,000 for the year. So every single year up until that 5th year, we're going to be able to write off $5,000 on our tax return. Now let's flip that with a rental property. Let's say we purchased a rental property for $175,000. Now real estate is expected to have a life expectancy. I can't even say that word. Expectancy life of 27.5 years. Don't laugh at me. All right, so let's say that we had $175,000 that we purchased on our rental property. Divide that by 27.5 years. That equals a depreciation of $6,364 per year. These are just the three main strategies that my client had used to help him save $8,525. Now think of how much you could save with your business and using these strategies plus more, because this is not to say that these are the only strategies. There's so many more strategies out there that you can capitalize on with your business. Imagine what you can do with $8,525. Well, there's so many things that you could do with that. So if you're interested in wanting to know how I can help you save on taxes and maximize your cash flow, then click that link below in the description to book a call with me, and I will see you guys on the next video.